Okay. So hello and everybody. Hello, good afternoon, everyone. How are you all? Yes, I'm fine. Thank you very much. Okay, friends. So my lovely friends, today we are starting cost part 2. What did we study in cost part 1, sir? In cost part 1 we studied different types of cost, right? Be it accounting cost, explicit cost, implicit cost, opportunity cost, economic cost, social cost, and so many other varieties of cost. Historical cost, replacement cost, all these things we studied. After studying this, we moved on to the different types of cost curves, right? With particularly fixed and variable. We discussed how total fixed curve is a horizontal line, total variable cost is inverse S shaped, and total cost is also S shaped. Okay, remember total cost starts from y axis because total cost is equals to total fixed cost plus total variable cost. Things like this we had studied, things like this we had studied, right? Things like this we had studied. Then moving from total we moved to average, where we studied these three types of curve that you are seeing in the presentation here. Okay, number one was average cost curve. We studied, I made you draw a chart also, right? Yes sir, yes sir, I made you draw a chart wherein I told you accounting cost, basically average cost, AC average cost, and AVC are both U-shaped. My dear friends, how many of you remember the reason from the last class? Come on, everybody, in the write the reason in the chat. Fatafat, everyone. Yes, you are absolutely correct. Most of you are writing the reason to be yes, law of variable proportion. Absolutely, absolutely, absolutely correct. So yes, indeed, the answer is law of variable proportions. Yes, the answer is indeed law of variable proportions. So yes, AVC and AC curve are both U-shaped because of law of variable proportion. In fact, not only AC and AVC. Why would only I write AC and AVC? I would rather write MC as well. All these three because of law of variable proportion. Fantastic. And what was the shape of AFC called? Do you remember, my lovely friends? What is the shape of AFC in the short run called? Come on, everybody. What is the shape of AFC in the short run called? Come on, everyone. Yes, you all are absolutely correct. While you tell me that the shape of AFC is called a rectangular hyperbola. The shape of AFC is called a rectangular hyperbola. You are absolutely correct when you say so, guys. Rectangular hyperbola. Yes. So AFC curve is rectangular hyperbola. Very good, Ritika, Bhavna, Zeba. Fantastic. Okay, great. Very good, Azhar. Great, great, Shubham. Fantastic. So now the fact that we have understood this, the fact that we have got to understand this, now let's move on, sir. Let me tell you some peculiar things that I did not tell in the last class. Let me tell you some peculiar things which I did not tell in the last class. Pay attention, everyone. We will start where we ended in the last class. Guys, see, AC curve is U-shaped, AVC is U-shaped. You all know this. But there is a big question that I have in mind. You all have to answer this. I will not help you in this. My question is, can AC and AVC touch each other? What do you think, guys? Can they touch each other? Is there a point where it is possible that AC and AVC can meet each other in real life? What do you think, guys? Your opinion, please, everyone. Indeed, very good. Great. Correct answers flowing from each one of you. Yes, you all are absolutely correct. While you tell me, yes, you all are absolutely correct. While you tell me that no, sir, it's not possible. Why, sir, it's not possible? Because you see, what is average cost? Average cost equals to average fixed cost plus average variable cost, right? Average cost is average fixed cost plus average variable cost. So my lovely friends, if average cost is average fixed cost plus average variable cost, for average cost and AVC to be equal, AFC will have to be 0. But can AFC be 0? No, because total fixed cost can never be 0. Always there is some cost that is incurred, and therefore AC and AVC will never touch each other. So the answer is correct that you all gave. No, sir, it cannot touch. Why? Because AFC can never be equal to 0. Why can AFC not be equal to 0? Because total fixed cost can never be 0, and hence AC and AVC will never touch each other. Yes, it's correct that you see first AC is there and AVC is here, so they are far off from one another. Gradually they come closer and closer. This is no doubt. I don't doubt this, because what happens is, guys, gradually AFC keeps on falling, because total fixed cost is constant. You see now, for example, I'll tell you for example, let's say total fixed cost is 100. So when quantity is 1, average fixed cost will be 100. When quantity is 2, average fixed cost will be 50. So guys, what I'm trying to tell you here is, what I'm trying to make you realize here is that average fixed cost is constantly declining. Average fixed cost is constantly declining. Yes or no, friends? Yes sir, it indeed is declining. You see here, it's constantly declining. So my dear friends, because average fixed cost is constantly declining, and the distance between AFC and the distance between AVC and AC is because of what? Because of average fixed cost. So since average fixed cost is gradually falling with the rise in quantity, so the distance between the two is declining. So gradually the distance between the two is declining. If your question is why, because gradually AFC falls, सर इन हिंदी वंस अगेन, AC और AVC के बीच में पहले गैप ज्यादा रहता है, बट ग्रेजुअली AC और AVC के बीच का गैप कम हो जाता है, क्योंकि ये गैप किसकी वजह से है? ये गैप AFC की वजह से है. अब अगर AFC ग्रेजुअली डिक्लाइन कर रहा है, इसका अर्थ क्या हुआ कि AFC अगर ग्रेजुअली डिक्लाइन कर रहा है, तो ये जो गैप है AC और AVC के बीच में, जो कि कुछ नहीं AFC ही है, तो वो भी ग्रेजुअली ही डिक्लाइन करेगा. एंड इसलिए आप देखो धीरे धीरे AC एंड AVC एक दूसरे के पास आते जा रहे हैं. क्यों? बिकॉज AFC गिरते चला जा रहा है. Is it crystal clear, friends? Is it crystal clear? Yes or no? That why the distance between the two is initially more and then it eventually falls. Is it crystal clear, friends? Come on everybody in the chat box. You or no? Come on yaar everyone. Come on friends. Yes sir, fantastic. Alright, great then. So the fact that most of you have been able to realize this and understand this, it's pretty good. It's pretty much interesting, right? So now moving on yaar. Let's move on. So pay attention everybody, right? The fact that you have understood this, now okay, yes sir, yes. So now moving on to some MCQ question. Okay guys, are you ready for some MCQ questions or what? Yes sir, we are ready. So please tell us, sir, please tell us. All right sir, let me tell you. Okay, come on, question 1 and question 2. I have the written MCQ for you all. Come on everyone, answer me. Yes Rafika. All right. Okay, so what we have understood is average fixed cost remains same. No. Increases? No. Decreases. Correct. Option number C. Average fixed cost decreases as output increases. Today only I revised this. Last class I taught this. So therefore it will be, average fixed cost. Guys, see, most of you are tricked. You have written remains same. It's the total fixed cost that remains the same, not average fixed cost. Average fixed cost, so as you increase the quantity, average fixed cost is total fixed cost by quantity. So as quantity, that is the denominator, rises, the overall value will fall. So it decreases as output increases. 1C. Moving on. All the curves except which one is a U-shaped curve? Yes, this all of you have written correctly. Average fixed cost curve. Because why? Because it's a rectangular hyperbola. Now guys, most of you had asked me a question. Where is normal profits included? Normal profits, where are they included? My dear friends, normal profits earned by a firm, please pay attention everybody. Normal profits earned by a firm are included in, yes, you all are absolutely correct, in the implicit cost. What do you mean by normal profits? What do you mean by normal profits, sir? Normal profits means a scenario where doing business you are able to make money which you would have made otherwise. Sir, can you explain? Yes sir, I'll explain what normal profits is. I had kept it for today's class only. So have a look guys, pay attention everybody, okay? I am explaining normal profits. Are you ready everybody? Are you ready everyone to listen to normal profits, yes or no? Because I'll be giving an example. So are you ready all? Okay, fantastic. So now let's move on. Let's understand what does it mean. See. See. Let's say this person, Mr. let's say Harsh. Okay, Mr. Harsh. After completing his CA, Mr. Harsh was getting a job of, let's say he was a fresher, so he was getting a job of, let's say 15 lakh rupees per year. Okay, but Mr. Harsh tells us that no, I want to do my own business. The fact that I have completed my chartered accountancy, I will use it for my own business. I'll use the knowledge for my own business. Let's say he enters into a leather business, okay, leather or a textile business, let's say, you know, he hires some staff whose salary he gives 2 lakhs, okay, some raw material he purchases for 5 lakhs, and eventually he sells them all at, he sells them all at 10 lakh rupees. Now he is very happy, Mr. Harsh seems to be very happy. 10 lakh minus 7 lakh, so he is making a profit of 3 lakhs. He is very happy. But this is, my dear friends, profit as per accounts. This is profit as per accounts. As per economics, he is incurring losses. As per economics, he is incurring losses. Can you tell me why? Accounting profit, you all get it. Sales minus cost, full stop. But why is economics telling that it's a loss? Very good everyone. Because despite the fact that he is making 3 lakh rupees, he would have made a 15 lakh had he been doing a job. So in reality, he is making 3 lakh. He could have made a 15 lakh. So he is making 12 lakh loss. Normal profit is a situation where by doing business, Mr. Harsh is able to earn enough in order to compromise for the loss of job. So had the situation been like this, that his sales figure would have been somewhere around, let's say his sales figure would have been somewhere around, pay attention everyone, 22 lakhs. So now what has happened? See, now what has happened? Sales 22 lakh minus 7 lakh. How much accounting profit he is making? 15 lakh. In this process, he is able to also, if we deduct accounting profit is 15 lakh. If we deduct the implicit cost, that is the sacrifice of the job opportunity, 0. This is a situation of normal profit. So normal profit implies 0 profits. It is a situation, normal profits is a situation where whatever you are sacrificing, you are able to make that also with your current decision. Simply speaking, you are able to recover your implicit cost as well. You are proving your decision to be right. Exactly my point. That the 15 lakh revenue that you were losing out each year, you have been able to make up for that. When you are able to make up for that, it means you are earning normal profit. It means you are earning normal profit. Oh, okay. That's what it is. Correct. Guys, do you understand what normal profit is? So normal profit is a situation whereby doing a business or by pursuing an activity, not only are you able to recover your explicit costs, but at the same time you are able to recover your implicit costs. Okay, guys, please give me a thumbs up. Is it crystal clear? Come on, everyone. Yes, very good. And that's why, my dear friends, lovely friends, I told you that normal profits are included in which one? Implicit cost. This one is a repeated question, obviously, so I'm not answering this. All right, fantastic, guys. Come on. Next one. Let's see how many of you are able to answer this next question. I'll relax. You'll have to answer. Okay, let's see. So at the very beginning, we have started with a test only. Okay. Nishant, Tavleen and Manas are confused with the formula for deriving total cost. Guys, Nishant says TVC plus TFC. Tavleen says AC into output. Manas says sum total of marginal cost plus total fixed cost. Who you think is correct? Nishant, Manas, Tavleen, or do you think all of them? What do you think? Okay. One interesting question I have got, I'll answer this, but first all of you answer this one. Okay, Abdul, you have answered it. I can see you have answered it, but you know, there is a slight discrepancy here. All right, I can see it, but there is a slight discrepancy here. Yes, yes, yes. Very good. Gunshita, your answer was first. You are the first one to answer correct. No, it was Keshab, Bibika. Very good. They answered at the same time. Very good, Sahajpreet. Very good. You see, guys, Nishan saying total cost is total fixed cost plus total variable cost is correct. No doubt. Arey Baba, now you all know average cost is what? Total cost by quantity. So if we send quantity there, average cost into quantity is also total cost. So how the hell do you think he is wrong? He is correct. Now, Manas says it is sum total of marginal cost. Correct. Marginal cost represents change in variable cost. So if you add all the marginal cost, it will give you total variable cost. And here they have given plus total fixed cost. So all of them are correct. This is the correct answer. This is the correct answer, my lovely friends. Because remember, when you add all the marginal costs, write it down. When we add all the marginal costs, what do we get? What do we get? We get total variable cost. Write it down. Sum of marginal cost equals to total variable cost. Come on, everyone. Sum of marginal cost is equals to total variable cost. You have to acknowledge this. You have to write down in the chat box before I can start teaching anything else. Come on, everybody. Come on, everyone. Yes, fantastic. So yes, you all are correct that sum total of marginal cost, sum total of marginal cost, sum total of marginal cost is total variable cost. Sum total of marginal cost is total variable cost. Clear hai? All right then, sir. Fantastic, sir. Fantastic. Moving on to the next one. Moving on to the next one. Pay attention, guys. Pay attention, guys. All right, let's go here. Now, before I move on any further, I want you to know something, guys. Now I'll discuss two things and then we'll be back to MCQs. Okay, we'll be back to MCQs. Okay, pay attention, everyone. Relationship between AC and MC. So you see what is happening. See here MC. See here MC. It is less than average cost, right? So when MC is less than AC, you guys see AC is constantly on the fall. But now MC meets AC. MC intersect is AC at its minimum point. MC intersects AC at the minimum point of AC. MC intersects AC at the minimum point of AC. Once MC and AC meet each other, then AC also rises, MC also rises. So it's basically like AC is a student who needs guidance. MC is like a teacher who is providing guidance. Look here, when the student, that is AC, is falling in life, the teacher is coming to meet the child. Now both are doing well in life. So MC is also rising, AC is also rising, obviously. And sir, MC is greater than AC. Sir, why? Because when the teacher is able to help many students, it's the teacher who is very happy, and therefore MC is above AC. That's what it is all about. It's just a trick to remember. Most of you will think what sir is telling. Okay, all right, sir. So now pay attention, everyone. So what I'm trying to tell you is that MC is intersecting AC at the minimum point of AC. All right. When MC is less than AC, AC is falling. When MC is less than AC, AC is falling. Then MC comes and meet AC at the minimum point of AC. Once they meet, both of them rise. Is it crystal clear, guys? Please remember this. And you know what the funny thing is? Same is the relationship between AVC and MC. Same is the relation between AVC and MC. Same is the relationship between AVC and MC. So what are you trying to tell, sir? You're trying to tell that AVC also is intersected by MC at its minimum point. Yes, have a look. This is AVC. I'll draw it with a red line basically. You see the same scenario is happening here. AVC, MC is coming, MC is meeting it at its lowest point, and both of them are rising. And obviously MC is greater than AVC. So MC intersecting both AC and AVC at their minimum point. MC intersects both AC and AVC at their minimum point. So have a look here. Have a look. MC curve intersect AC curve at its minimum point and AVC curve at its again minimum point. So the answer to this question is minimum. Is it crystal clear, friends? Is it crystal clear, friends? Is it crystal clear, friends? What say, guys? What say, guys? What say, guys? Yes, sir, it's pretty clear. All right, fantastic. So yes, brilliantly done, yaar. Pay attention, everyone. So both are intersected at their minimum point. Now let's see question number 7 and 8 who is able to solve. Okay, let's have a look, guys. Okay, pay attention, everyone. A firm has a variable cost of rupees 1,000 at 5 units of output. Okay, variable cost is 1,000. Fixed costs are rupees 400. What will be the average total cost at 5 units of output? Average cost and average total cost are the same, so don't get confused. You people don't get confused. Okay, so now, like, guys, let me hear your answers, please. Guys, let me hear your answers, please. Come on, everybody, your answers, please. All right, correct. So see, total variable cost is 1,000. So what is average variable cost? It's 1,000 by 5, 200. Correct. Fixed costs are 400. So 400 by 5 is 80. So average fixed cost is 80. Average variable cost is 200. The sum of 2 is 280. So the answer is 280. So the answer is 280. Yes, very good. 280. Correct. Great. Ishan, good answer, friend. Very good answer, Nandini. Ashfiya, good answer. Shruti, good answer. So yes, it will be 280. It will be 280. The reason is very simple, because 1,000 divided by 5, it's 200, and 400 by 5, it's 80. So 280, it's there. There it is. So what will be the average total cost? It will be 280. Moving on, sir. Moving on, sir. All right. Next, identify this curve. Identify this curve, and you people have already answered this question. Fantastic. It's a rectangular hyperbola, and yes, rectangular hyperbola is a curve shown by average fixed cost. Guys, in your economics journey till now, you have come across two cases of rectangular hyperbola. Do you remember which one? First is AFC, and the second one is, yes, the demand for unitary elastic demand under the percentage method, where elasticity used to be 1. In both these cases, you have got it correct. It's rectangular hyperbola. You all are absolutely correct. Fantastic. Now moving on. So the fact that we have understood this, we have also got the relation between AVC and MC. Okay. Another question that, guys, comes in exam very often is, which minimum point comes first? Because MC is intersecting both AVC and AC. MC is intersecting both AVC and AC at their minimum points. Yes or no, everyone? MC is intersecting both AVC and AC at their minimum point. Yes or no, everyone? Yes, sir, it indeed is. Yes, sir, it indeed is. So have a look, guys. Here is MC curve. Can you see it? Yes, sir, we can see it, certainly. So lovely friends, what I'm trying to say is, what I'm trying to tell you here is that the thing is very simple, that the approach here is very simple, that since it's intersecting both at their minimum point, the AVC's minimum point comes before AC. Remember this, minimum point of AVC comes before minimum point of AC. Minimum point of AVC comes before minimum point of AC. Minimum point of AVC comes before minimum point of AC. Come on, everyone, write it down in the chat. Whose minimum point comes first, AVC or AC? Correct. The minimum point of AVC comes before. So my MCQ question to you all, correct? All right, then let's see. When MC is less than AC, AC falls, rises, can't say, none of above. What do you think is the answer, guys? Come on everybody, I need your answers everyone. It's MCQ time. Yes, you all are absolutely correct. When MC is less than AC, AC falls. When MC is less than AC, AC falls. Very good. Moving on to the next question. Pay attention. MC intersects AC at its dash point A, maximum point B, minimum point C, both D, none. Come on everybody, come on everybody, come on everybody. Pay attention everyone. Lovely, lovely, lovely. MC intersects AC at its minimum point. MC intersects AC at its minimum point. Very good. You people are amazing. You people are amazing. Moving on to the next question, friends. You know, before we talk about returns to scale, one last question, okay? So let's ask you this question then. Minimum point of AVC lies to the dash of minimum point of AC. A, right, B, left, C, can't say, D, don't know. What do you think is the correct answer, guys? Yes, yes, yes. And minimum point of AVC lies to the dash of minimum point of AC. You guys have 4 options: right, left, can't say, don't know. Come on everybody, come on everybody. Yes Rahul, come on, your answer is correct, but that is not the option here. Choose among one. All right. Yes, 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 yes. Manash, wrong my dear friend. Yes, Vishnu, Ritika correct, great. Rahul correct, Shruti correct. Now people are answering correct. It's the left, it's the left, it's the left, left, left. You see here, I'll show it to you. Pay attention here. You see, have a look here. I'll draw, this diagram is drawn, I'll do it again for you all. Pay attention here. It comes before, it's absolutely correct. But if you have a look here, see this minimum point is left now. So this point B is at the left. This point B is indicating the AVC minimum point. This point A is indicating the right side, and it's the AC minimum point. My dear friends, are you with me on it? Are you with me on it? Come on friends, are you with me on it? Yes or no friends, are you with me? Yes, sir. We are with you. Fantastic then. Fantastic. Great. Amazing. So it's basically, yes, the correct answer is left. The correct answer is left. The minimum point of AVC is to the left of minimum point of AC. Come on, come on, come on. One more question, one more question. Ye dil mange more. Come on, one more. Let me ask you another question. Minimum point of AC is to the dash of minimum point of AVC. Option A, right. Option B, left. Option C, can't say. Option D, don't know. Come on everyone. Come on everyone. Yes, now you people are not tricked. You have answered it correctly. Sir, you cannot trick us twice. Very good, very good, very good everyone. The minimum point of AC is indeed to the right of minimum point of AVC. So you all are not at all wrong. Absolutely correct. It's to the right. So guys, 10, 12 MCQs, we have solved it at the very beginning. It's amazing news, isn't it? Friends, confident till here? You or no in the chat, guys? Come on, everyone. So that now we can start our next discussion about long run. We have been talking about short run. Now let's talk about long run. Are you friends confident enough for me to start further? Come on, everybody. Come on, everybody. Come on, everybody. Please. Okay, great, great, great. Yes, sir, please attack. So, yes, my dear friends, remember, in the long run, the law that operates is not the law of variable proportion. In the long run, the law that operates is not the law of variable proportion. In the long run, the law that operates is law of returns to scale. What doesn't operate? Law of variable proportion. What operates? Law of returns to scale. So yes, please remember this. And guess what, guys? Here, all the factors of production are variable because you have plenty of time to buy new inputs. All right. So all the factor inputs are variable. All the factor inputs are variable. All right. Please remember, all the factors of production are variable here. All right. Yes, sir. So please remember, in this world, there is nothing called fixed cost. Arey Baba, if there is no fixed factor of production, how can something be a fixed cost? So all the costs here are variable cost. So when we talk about long run, you see, there is no concept of variable cost. It's only total cost or average cost that we are concerned with. So how does the long run average cost curve shape? It's U shape. They'll ask you why. You see, when you operate on a large scale in the long run, please come on everyone, when you operate on a large scale in the long run, there is benefits called economies of scale, and therefore the cost falls. So this is because of economies of scale. These are advantages. But beyond a certain level, if you try to increase due to overcrowding and so many other things, instead of economies of scale, the firm starts experiencing diseconomies of scale, and therefore the cost goes up, and hence the U shape, Therefore LAC curve is U shape. Why? Because of economies and diseconomies of scale. Because of economies and diseconomies of scale. Correct. Here we will not talk about AFC and AVC at all. Absolutely correct. We will not be talking about them. So please remember one thing, that guys, long run average cost curve is U shaped. Why? Because of economies and diseconomies of scale. And therefore it's U shaped. Because of economies, that is advantages. Today we will talk about economies and diseconomies at a great length. आज बहुत बात करने वाले हैं इसके ऊपर. Almost 45 minutes to 1 hour I'll talk about this only. But then pay attention here. First you need to know what is the shape of LAC curve in the long run. What is the shape of LAC curve in the long run? Come on everybody, I need to know your answers yaar. Correct. हाँ जी, तो लॉन्ग रन में इकोनॉमीज ऑफ स्केल एंड डिसइकोनॉमीज की वजह से लॉन्ग रन एवरेज कॉस्ट कर्व का शेप यू शेप्ड होता है. व्हाट इज द शेप? यू शेप. बट रिमेंबर, in the long run case, you will not write due to law of variable proportion. No. In the long run, it's always due to law of returns to scale, not because of something else. Therefore, if they ask you the shape of LAC in that is long run average cost curve, come on everyone, what is it? U shaped. Question is why? What is that one single answer you will write? Come on everybody, show it to me in the chat box yaar. Yes, law of returns to scale. You will ask me how this curve is made, sir. It seems so complicated. It's very easy. I'll tell you, don't worry. But first you need to remember this. What you need to remember, you have to remember and therefore I'll make efforts for the same. Okay, now pay attention guys, now pay attention guys. Okay sir? Yes sir. Sir, we are listening sir. So my lovely friends, here I come with a question for you all. In fact, not a question, an explanation for you all. See what actually has happened, I'll tell you all. You see here, you know, this is a curve. I am showing you how to draw LAC curve. You know, this is quantity axis and this is average cost axis in the long run, right? Lovely friends, right? Yes sir, right. Now lovely friends, it is short run average cost curves that we are making. It is short run average cost curves that we are making. So please pay attention. Short run average cost curve 1, because you know long run is made up of a lot of short runs. So I'll make another short run average cost curve 2, another short run average cost curve 3. So you know, if you join the minimum points of short run average cost curves, the minimum points of short run average cost curves, if you join, you will get the long run average cost curve. Oh, that's why LAC curve is also called envelope curve. It's also called envelope or blanket curve. Why? Because just like an envelope can hold many things, LAC curve is holding a lot of short run average cost curves. Just like that, LAC curve is holding a lot of short run average cost curves. So LAC curve is also called blanket curve or envelope curve. Why? Because it contains a lot of short run average cost curves. How is it made? By joining the minimum points of short run average cost curves. Because in fact, what is long run average cost curve? It is a sum total of lot of short run average cost curves. Isn't it friends? Yes sir, yes sir, yes sir. So there it is, there it is, there it is. So please remember that long run average cost curve is U-shaped. It is because of law of returns to scale. It's also called an envelope curve. Why? Because it is made up of a lot of points of short run average cost curve. My lovely friends, is it crystal clear? Yes or no? Lovely friends, is it crystal clear? Yes or no? Come on everybody, come on, come on, come on everybody. Yes sir, fantastic, fantastic, fantastic. It is absolutely clear to us sir. Before guys, I progress to our next discussion, which is pertaining to economies and diseconomies of scale. You know, 1 or 2 MCQs I will like to solve with you all from the institute's material as well. All these were from institute's material obviously, but still, you know, hold on guys. Okay, it seems I'll have to write down the questions. Okay, I'll write down the questions. Not a problem at all. Okay, pay attention guys. But before we talk about those questions, you know, first question that comes to my mind is, please tell me the answer everybody. Okay, long run dash law operates. Which law of production operates in the long run? Very important MCQ question from the institute's material itself. Come on everybody, tell me the answer. Come on everybody, tell me the answer. Very good Mr. Ashish Kumar, very good, very good. It's the law of returns to scale. The law of returns to scale. So it's the law of returns to scale that operates in fact in the long run. It's the law of returns to scale that in fact operates in the long run. Remember everybody. So if somebody asks you when does it operate? In the long run. When does it operate? In the long run. Okay, then another question that crops up is, what is the law that operates in the short run then? What is the law that operates in the short run then? Come on everyone. Okay, great. It's the law of variable proportions. It's the law of variable proportions. It's the law of, yes, variable proportions. So the fact that we have understood this, now let's proceed a way bit more. Okay, now proceed a way bit more. Okay, sir, let's do it then. Let's discuss a little further. Okay, yes, sir. So here friends, we will talk about economic scale of production. Remember lovely friends, that since you are in the long run, you have to talk only related concepts related to long run. Okay, forget about short run now. If you think of short run, you are gone. It's absolute waste of time, sir. It's absolute waste of time, sir. So please remember that in the long run you are discussing. Okay, so in the long run, my dear friends, scale of production is what we talk about. In the long run, guys, there are 2 things that can happen. Number 1, economies of scale, and number 2, diseconomies of scale. What is economies of scale, sir? My dear friends, these are certain advantages. What are economies of scale, sir? These are certain advantages that occur in the long run. Advantages in the long run are called economies of scale. What is economies of scale? Advantages in the long run. Okay friends, similarly lovely friends, in the long run there are certain disadvantages that lead to higher cost. So this disadvantages in the long run is called diseconomies of scale. This disadvantages in the long run is called diseconomies of scale. What will happen because of disadvantage? Cost will fall or rise? Cost will rise. What will happen because of advantage? Cost will fall. And that's what economies of scale is all about. But sir, do we talk only about long run here? You talk only about long run here. Absolutely. You talk about only long run here. There is no question about that. Acha sir, is that so sir? Yes sir, that is so. Now friends, the fact that you have understood this, now let's move on friends. So pay attention. Economies of scale, my lovely friends, can be divided into two parts: internal, external. Diseconomies of scale, internal and external. Sir, what do you mean by this internal, external? See, internal is something, some advantage or disadvantage that is occurring because of something going on in the firm. For example, if there is a very good manager that the firm is able to hire, it's not happening in the entire economy, it's happening in that firm, and so it's an advantage, internal advantage. Suppose the manager is not good, the management is not good, management is very poor, so it's an internal disadvantage. Okay, there it is. But sir, what do you mean by external? External means that is not relevant to firm. It is obviously leading to, it is affecting firm in some way or the other, but it is not within the firm, it is in the industry. Sir, example, let's say government has removed import tax on jute or import tax on leather. Now if government has reduced import tax on leather, the domestic sellers of leather will be affected. Why? Because now people will have an option to import leather as well. So my dear friends, something which is outside the firm, which is somehow beyond the control of the firm, if it is resulting in any advantage or disadvantage in the long run, you will call it external economies or diseconomies. Advantage, if it's advantage, it's economies, and obviously if it's disadvantage, it's diseconomies. There is no second question about this. Obviously if there is advantage, it's economies, and if there is disadvantage, there is diseconomies. So there is no second question about this, right? So there it is. All right, sir. Sir, we have understood your point pretty much. So there it is, sir. Okay. We will talk about it in detail, so don't worry. Okay, pay attention everyone. So economies of scale, internal advantages and external advantage. Similarly, diseconomies of scale, internal disadvantages and external disadvantages. All right. Okay, pay attention. Now we will study each one of them. So listen to me very carefully, or else you might be in a position to miss it out. But remember, everything is happening when you are operating on a large scale. So remember, you are operating on a large scale. Any economies or diseconomies will only occur when you are producing on a large scale. Correct? Okay. So let's pay attention. Now we will talk about internal economies and diseconomies. Internal economies means internal advantages. Diseconomies means internal disadvantages. So pay attention everybody. Okay. So listen up. Okay. See, technical economy. First of all, what is technical economy, and then what is technical diseconomy? Okay, I'll explain both the sides to each one. Okay, first of all, technical economy. What happens is, my dear friends, when you operate on a large scale, it's possible to buy new machinery, to buy special machinery, because if you are producing very limited quantity, you will not want to buy new technology. Okay, you will buy new technology or expensive technology only when you are operating on a large scale. That's what is called economies of scale and technical economies of scale. But guys, what is diseconomy? Guys, you can only expand your production with new machinery up to a certain point. Suppose you have reached that optimum level, even in the long run. Now you will start having management problems. You will not be able to manage so much, and therefore diseconomies. Remember, after every economy, there will be a diseconomy if you cross a particular limit. That's the simple trick. Okay. And yes, remember, in small scale, there is no chance or very little chance of economies or diseconomies. So remember, in long run, we are only talking about large scale operations. In long run, we are only talking about large scale operation. In long run, we are only talking about large scale operation. In long run, we are only talking about large scale operation. Okay. So we got it, sir. Now let's talk about managerial economies and diseconomies. Let's talk about managerial economies and diseconomy. Pay attention, everyone. My dear friends, when you are producing on a large scale, say like a company like Tata or the Reliance Industries, what they are able to do is, for production they can hire another manager. To deal with sales related masla, they can hire another manager. है ना? To deal with advertising related issues, they can hire another manager. So it's possible to divide management, and as a result of this, each department is able to perform better because there is a dedicated management for the same. Because there is a dedicated management for the same. Because there is a dedicated management for the same. So my lovely friends, my lovely friends, this is what I am talking about. When this is happening, when you are able to hire a technically sound people, because each will now, there will be division of work. Basically there will be division of work, and that's managerial economy, because now each will do better. And what is managerial diseconomy? Now suppose under one manager there are many people. This way the cost will rise, and overall it will be a disadvantage to the firm. So that's managerial diseconomy. I told you now, any point I will explain, if advantage is carried on for a little longer, it will turn into a disadvantage. Full stop. I'll explain in Hindi managerial economies again. जब आप एक बड़े स्केल पर, बड़े स्तर पर ऑपरेट कर रहे होते हो, तो आपके लिए पॉसिबल होता है हायर करना स्पेशलाइज्ड लोगों को. प्रोडक्शन के लिए अलग मैनेजर है, सेल्स के लिए अलग मैनेजर है ना? इस तरह से एडवर्टाइजिंग के लिए अलग मैनेजर है. तो अब होता क्या है दोस्तों, जब हर चीज के लिए एक अलग मैनेजर है ना, तो दोस्तों चीजें आसान होने लग जाती है. क्यों? क्योंकि हर चीज के लिए एक अलग मैनेजर है. अब जब दोस्तों हर चीज के लिए आपने एक मैनेजर को रख रखा है, तो परफॉर्मेंस बेटर हो जाता है, जिससे एडवांटेजेस आता है और कॉस्ट पर यूनिट गिरता है. इसको बोलते हैं मैनेजरियल इकोनॉमी. परंतु अगर आप ज्यादा लोगों को हायर कर लो, तो होगा क्या कि अब मैनेजर के लिए मैनेज करना डिफिकल्ट हो जाएगा, किसी एक डिपार्टमेंट को भी. उसको बोलते हैं डिसइकोनॉमीज ऑफ स्केल. कोई भी चीज जब ज्यादा होने लगे तो वो डिसइकोनॉमी बन जाती है. सिंपल सी बात ये है. Anything that happens beyond a certain limit, beyond an acceptable limit, it turns into a diseconomy. Full stop. So only till acceptable level is it an economy. Beyond that acceptable level, lovely friends, it becomes a diseconomy. Okay? Yes sir, it's pretty much clear. Come on everyone, is it clear? Yes sir, seems so. Okay, great. Now friends, we are talking about financial economies and diseconomies. Okay, pay attention everyone. Okay, financial economies and diseconomies. You see, if you operate on a large scale and you are a large firm like the Reliance and the Tatas, it is easier for them to raise money from the market in better terms and conditions. Like banks will be ready to give you loans at a lesser rate of interest. Even people will be ready to buy your shares because of your large scale operations that is known to them. Okay, correct? Yes sir. But it can also turn into a diseconomy. When sir? Suppose because the organization is able to raise finance very easily, now by raising finance they are spending unnecessary amount on advertising and other expenses, other overheads, which is not needed. More than needed they are spending. Why? Because they are able to raise finance very easily. My dear friends, that's diseconomies. My dear friends, that's diseconomies. Oh, it's pretty easy, sir. That since you are operating on a large scale, you're a large firm, so therefore certain advantages will arise. Like what advantage will arise, sir? You will be able to raise money at better terms and conditions, and this advantage is called financial economy. But beyond a certain scale, what will happen? You will find out that your firm is spending unnecessarily too much. Your firm is spending unnecessarily too much, and that's diseconomy, financial diseconomy. Hello everyone, is it crystal clear or not? Now we are discussing internal economies and diseconomies. Guys, is this much clear? Yes or no? Come on everyone. Okay, great. All right, great. So the fact that you people have understood this one, let's move on to the next one. Please pay attention. Risk bearing. Guys, you all tell me, who is in a better position to face economic upturns and downturns? A large firm or a small firm? That is a firm operating on a large scale or a firm operating on a small scale? Correct. A firm operating on a large scale. Why? Because they have diverse businesses. I'll give you an example. Suppose you only have a hotel. You are only in the hotel business. Okay. Suppose you are only in the hotel business. Pay attention everyone. मान लीजिए आप केवल होटल बिजनेस में. Pay attention everyone. COVID has come. Your business will close down for a year or two. Your business will be totally disrupted. Yes sir, agreed. But come to the second part of the picture. What is it, sir? But if you are a brand like Tatas have their Taj hotels, Tatas have their watches, Tatas have their cars, Tatas have there are so many yes sir, correct sir. But now, beyond a certain level, if you diversify, again management will become problem. You will not be able to manage your oil business. You will not be able to manage your textile business. If things like this start happening, you have started facing a disadvantage rather than an advantage. That's what they are saying. Risk bearing economies and diseconomy. Always remember, diseconomies happens when the economies are put to a greater limit. When you're over exploiting things, when you're going beyond that optimum level, when you are exploiting things beyond that optimum limit that you are allowed to. But that's it. Risk bearing economy and diseconomy. Okay. So there it is, the risk bearing economy and diseconomy. Okay. रिस्क बियरिंग इकोनॉमी का केवल अर्थ होता है कि जब आप बड़े बिजनेस हो, आपके बहुत सारे बिजनेसेस हैं, तो आप एक रिस्क को अच्छे से अवॉइड कर पाओगे, है ना. बट अगर आपका एक ही लाइन ऑफ बिजनेस है तो आपको डिफिकल्टी होगी. यही है रिस्क बियरिंग इकोनॉमी एंड डिसइकोनॉमी. मूविंग ऑन टू द नेक्स्ट लास्ट पॉइंट इन इंटरनल. Okay, in the last point of internal, that is commercial economy and diseconomy. Sir, what is commercial economy and diseconomy? Come on sir, what is commercial economy and diseconomy, sir? I'll explain to you. Pay attention everybody. What is commercial economy and diseconomy? I'm explaining now. Okay, yes sir, please go ahead. So dear friends, commercial economies are advantages. Suppose a company, I'll ask you a question. Okay, you will tell me. Guys, Lay's is in chips business. You all are also planning to do a chips business. Okay, one side there is Lay's, other side there is you. One side there is Lay's, other side there is you. Okay, both of you are competing against one another. Okay, tell me one thing. Who will be able to buy potato at cheaper cost? Who will be able to buy potato at cheaper cost? Because for chips you need potato. Come on everybody, answer this question. Answer this very easy question. Come on everyone, answer this very easy question, sir. All right then. Yes, you all are absolutely correct. You all are absolutely correct. Fantastic. 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 Lace. That's exactly. That's my point. That's my point, everybody. That's my point. You all have understood it absolutely correctly. That's my lovely point. Okay, friends, what did I want to tell you all? And what have I, been explaining you all? This only, that my dear friends, that since you are able to buy raw material at a cheaper cost, you are facing an advantage. That's commercial economy. That's commercial economy. Very good, Rahul. Very good, Vishnu. Great answer. That's called commercial economies and diseconomies. Come on, everybody. Is this clear? You or no in the chat box, please. You or no in the chat box, please. Come on, everybody. Need to know your answers. Correct, correct, correct. Please, because they are purchasing in large quantities. Correct. Come on, everyone. In the chat box, your answers, please. Fantastic. Okay. So guys, before I move further on, it's my intention to ask you one or two MCQs. Are you guys ready? What say? Are you all ready? Yes, sir, we are. Before we move to external, let's talk about internal and some MCQs, okay? So let's go. Okay, guys. So here are few questions that I have in mind for you all. Let me see whether you people are able to answer this or not. Okay. Let me see whether you people are able to answer this or not. Okay. So here we go. This is from the institute's material. I am copying the question. What we are doing is 27, 28, 29. Everybody. I will write down the question. Don't worry. Question 27, 28 and 29. Okay. Number 27. Please pay attention, everyone. First I am drawing the question, the table, and then the questions will follow. I need each one of you to focus because it's a numerical one. Okay, numericals also I am practicing with you all, so pay attention. It's the output. Okay, here is the total cost, right? Yes, sir. Output 0, total cost 240. Output 1, 330. Output 2, 410. Output 3, 480. Output 4, 540. Output 5, 610. Output 6, 690. Okay, this is what is given. Don't question the question. Whatever is given, just accept it on the face value. Okay, don't try why this, why that. Don't ask this. Okay, this is the question. Now question part 1, that is question number 27 from the material is, what is the average fixed cost of 2 units? I'll not give you MCQ options. Okay, average fixed cost of 2 units. First question, 28 number. Marginal cost of 6th unit they are asking, and question number 29, where do you see diminishing marginal return starting to occur? Starts. Option A, from 2 and 3. Here I am giving you option in 3 and 4. Option C, 4 and 5. Option D, 5 and 6. Come on, everybody. I'll give you a time to think before I start solving it. Come on, everybody. I'll give you some time to think. So answer it, everyone. Come on, everybody. Yes, let's see. So let's see AFC of 2 units. See, average fixed cost of 2 units, maximum students, you are correct. Very good, yaar. You see, pay attention. What you people are doing is 410 by 2. Array, it is wrong. It is average cost. Question is asking average fixed cost. Sir, how do we know total fixed cost then? Array Baba, the cost that is incurred at 0 level is only total fixed cost, Re Baba. The cost that is incurred at 0 level is total fixed cost only. Oh, sir, we get it. So therefore, total fixed cost is what? 240 everywhere, 240 everywhere, 240 everywhere, 240 everywhere. Got it, sir? So 240 divided by 2 is 120, and so average fixed cost of 2 units is 120. Average fixed cost is 120. Okay, it's not 205 because the question is asking AFC, not ACE. So first you need to find out total fixed cost. Where is the total fixed cost? The cost incurred at zero output is the total fixed cost. 240 remains the same throughout. So at 2 units it will be 240 by 2. How did it come? 240 divided by 2, that is total fixed cost divided by quantity, because we have been asked average fixed cost. My dear friends, those who have made mistakes, is it crystal clear now? You have made mistake, that's okay, but is it clear now? At least you have not made it in an examination. Come on friends, please tell me, is it clear now? Okay, great. Yes. All right, yes. Okay. So the fact that you understood this, friends, brings me to the next question. Marginal cost of the 6th unit. So see, what is marginal cost at the 6th level? I taught you all total cost at that level minus total cost at the previous level. You can do the same formula using variable also, but since total is given, we'll use that. So total cost at 6 is 690, 5 at 610. So 690 minus 610, it's 80. So marginal cost at 6th level is 80. Marginal cost at 6th unit is 80 rupees. Is 80 rupees. 80 rupees. Okay, and now an interesting one. Where does diminishing MR starts? So you know diminishing marginal return. MR means marginal returns. So here, instead of panicking, first you calculate marginal cost. Okay, see, for first unit, for 0 it doesn't matter. So 240 to 330, 90. Beyond this, 80. 410 to 80, cost 70. 482 to A, 540, 60. 540 to 610, 70. 80. Okay. So diminishing marginal return means diminishing marginal output. My dear friends, pay attention. If output is diminishing, cost will rise. Yes or no, everyone? If output is declining, cost will rise. Yes or no, everyone? If output is declining, cost is rising. Where do you think the cost is rising? At 4 and 5, sir. Correct. So it's from 4 and 5 that the picture has started changing. Is it crystal clear, guys? Come on, everybody. Why? Because marginal return means marginal output. If output is diminishing, cost is rising. Where is cost rising? At this 60 to 70 level. Yes. And therefore, that's my answer. My lovely friends, is it crystal clear? Yes or no? Yes or no? Yes or no? Come on, friends. Very good. So please remember, it's between 4 and 5. It's between 4 and 5. Let's ask you the next question. Friends. If you people have understood this, let me ask you the next question. It's in Institute's material, question number 39. It's in Institute's material, question number 39. Everybody. Okay. Yes, go ahead, sir. So the question is, a firm's average total cost, ATC, is average total cost, also called AC. Okay, average total cost is rupees 300 at 5 units of output. Average total cost is 300 at 5 units of output and rupees 320 at 6 units of output. Okay, this is the average total cost, guys. All right. The marginal cost of producing 6th unit is, so the question is asking you, what is the marginal cost of producing 6th unit? What is the marginal cost of producing 6th unit? Come on, everybody. I need your answers right now. Come on, everybody. What do you think? Okay, go ahead, sir. So now go ahead, sir. Everybody pay attention here. Pay attention, everyone. See, what many of you are writing is 20. It's wrong. It's wrong. Yes, most of you have given correct answer. I am very happy about it. But some of you have given the wrong answer as well. We have to acknowledge it. See, my dear friends, what is marginal cost? Marginal cost at 6th unit is total cost at 6 units minus total cost as 5 units. What you people have done is, you have done average total cost at 6 unit minus average total cost at 5 units. Wrong, wrong, wrong. Absolutely wrong, wrong. Oh, is that so, sir? Yes, that is so. So, sir, you tell us how you go about it. See, quantity is 5, average total cost is 300. So, what is total cost? 300 into 5 equals to 1500. Similarly, if quantity is 6 and average total cost is 320, what is the total cost? 320 into 6, right? Correct. Which is 1920. Yes or no? So now you have total cost at 6 units as 1920. Total cost at 5 units is 1500. So my original cost at 6 unit will be 1920 minus 1500. That is 420. Now your answer is complete. Now your answer is complete. Is it clear, everybody? Come on, yaar. Okay, great, great, great. So the answer is 420. The answer is 420. Here the answer is 420. Yes, it's correct. Now you people are correct. My dear friends who said 20, it's okay that you made a mistake, but now is it clear? I need the reply from those who made the mistake. People who said 420, fantastic job. People who said 20, please tell me, is it clear now? All right, all right, all right, all right. The fact that it's clear now takes me to the next question. Okay, I am doing these questions right from the institute's back questions as well only. Okay, so pay attention, everybody. Next question. Come on, friends. Next question. A firm has a variable cost. Okay, what is the variable cost? You see, a firm has a variable cost of rupees 1000. This is 41 in institute's material. A firm has a variable cost of rupees 1000 at 5 units of output. Oh, okay, this question we have done today. This question I did today, this one. You remember, guys? We did it today, na? This one, that 281. That was question 41 from institute's material only. That we did at the very beginning of this class. It was this one only. So I'll do some other question. What is the use in repeating the question? Okay. So let's see the next question then. Okay. Question number 42. A firm's average fixed cost is equals to rupees 20 at 6 units of output. At 6 units of output. What will it be at 4 units of output? Very good question by institute. Very good question. Amazing question. Come on, everyone, tell me, yaar. Come on, everyone, tell me. Yes, yes, yes. Come on, everyone. Great. So right. You see, everybody. Again, you people are in a hurry. Some of you are in a hurry. I think you all know the answer. You see, average fixed cost is what? Total fixed cost by quantity. Now, lovely friends, average fixed cost is total fixed cost by quantity. Average fixed cost is 20. Total fixed cost we don't know. Quantity is 4 units of output. Okay? Yes, sir. So now what is total fixed cost? Total fixed cost is 20 into 4, that is 80. It's 80, it's 80, it's 80, correct. Now the fact that total fixed cost is 80, pay attention everyone, pay attention everyone. What will it be at 4 units? Okay, no, it's, sorry, my bad. It's 6 now, AFC is 20 at 6. So 20 into 6, 120, correct. 120. Now at 4, see, total fixed cost remains the same. Total fixed cost remains the same, 120. Quantity is 4 units. So what will be average fixed cost? 120 by 4. Therefore 30 will be your answer. 30 will be your answer. 30 will be your answer. Very good, Rohini. Correct answer, Rohini. Great job. Keshav, great answer, friend. Zeba, good answer. Rahul, good answer. Fantastic. So it will be 30, correct. Because what we have done is, first using average fixed cost, we have identified total fixed cost. And it was, 20 into 6 basically, it's 120. Once we got this 120, it was total fixed cost, so it remains the same. It remains the same. And so we have divided it by quantity level of 4 units, and hence we have been able to arrive at 30 rupees. And that's how we have operated. Okay? Remember this. Okay, great. All right. So now pay attention, everyone. Moving on. The very interesting question that I have got in Institute's material, it is question number 57. Question number 57, everyone. Question number 57. So let's solve it and find out whether we are able to answer it correctly or not. Question number 57. Okay. Which of following is a variable cost in short run? In the short run, which of the following is a variable cost? A, rent of the factory. B, wages to factory labor. C, interest payment on borrowed capital. D, lease payment, that is rent payment for factory equipment. Come on, everyone. Which of them is a variable cost? Come on. Very good. Wages paid. Correct answer. Because wages paid is directly related to output. I'll write it down here. Related to output. It's related to output. And so you people have been absolutely bang on correct in answering the same. Absolutely correct. All right. Great. So now the fact that, friends, you people have got it to where we are. Let's talk about some external economies and diseconomies. Obviously, after this we'll practice some more MCQ. Okay, don't worry. So pay attention, everyone. Let me see. Okay. External economy and diseconomy. Now, my dear friends, here we are not talking about an individual firm. Here we are not talking about an individual firm. No. Here we are talking about the industry in general. Here we are not talking about an individual firm. Here we are talking about the industry in general. Is that so, sir? Yes, that is so. So, sir, what do you want to tell us? How do you want to guide us through this? See, external economies and diseconomies is the topic that we are doing. Okay. So number one, cheaper raw material and capital.
cheaper raw material and capital. Pay attention everyone. If you are able to find out cheaper raw material, if you are able to find out cheaper raw material, then my dear friends, cheaper raw material and capital, because the industry is such, that your raw material is very cheap. You know, let's say for example, if you are in a business of construction, if the cement and stones are very cheap, that is advantage to the entire industry. So that is external economy. On the other hand, if it's not available for cheap, it's a disadvantage, this economy. Okay, so if it is available, it's economy. If it is unavailable, it's diseconomy. It all depends on availability. Got it, sir. Next point is technological. Let's point is technological economy and diseconomy. Pay attention everybody. My dear friends, if many producers are doing the same business, you see, everybody will invest on research, and because of this research, new knowledge may come to play, and therefore new technology may be built. Economy. But similarly, if there are very few industries in the market, nobody will want to develop technology for a business where there are few players, because who will we sell then, and therefore diseconomies. आप ये सोचो ना कि अगर मेरा काम मशीन बनाने का है और आप लोग, और मैं देख रहा हूं कि चिप्स का बिजनेस बहुत लोग करना चाह रहे हैं, तो मैं मशीन बनाऊंगा चिप्स बनाने वाली, बिकॉज मुझे पता है वो मशीन बिकेगी. मैं क्यों दिमाग लगाऊंगा और क्यों रिसर्च करके ऐसी जगह पे मेहनत करूंगा जिसका बिजनेस ही 2-3 लोग कर रहे हैं. अंडरस्टूड? दैट्स व्हाई टेक्नोलॉजिकल. Got it, sir. Next is skilled labor. Very important. Now see, in IT related, like this TCS, Infosys, they are able to hire cheap labor because they are easily available as far as IT is concerned. So there is economy in these industries, but at the same time, in some industries it's very difficult to find skilled labor. It could be related to medical profession, and therefore there is diseconomy. Ancillary industry, very important. Sir, what is an ancillary industry? Ancillary industry means a supporting industry. Sir, what do you mean, sir? Let's say MRF is making tires. Let's say for example, MRF is making tires. Now what one can do is, they can set MRF for its tires will need nuts and bolts. So what one can do is, the place where factory of MRF is located, beside this factory, one can set up the factory of nuts and bolts and supply to MRF. This way what is happening? Tires are being manufactured. This way what is happening? Tires are being manufactured. And yes, therefore economy. Therefore economies are striking. Got it, sir. So ancillary is supporting industry. Very good. Next is information. See, if necessary information is timely available of information, firm may take adequate decision, and therefore it may lead to economies of scale. But late information or late decision making might lead to disadvantage, and hence diseconomies of scale. So it's a very simple topic that way. There is not much here. If the decision in that thing is right, it's economy. If the decision goes wrong way, that's diseconomy or disadvantage. It's very simple there. Okay, sir. We have got it, sir. My dear friends, I believe most of you have got it. Can we move on to the questions, guys? Come on, everyone. Can we move on to some questions, guys? Yes, sir. Let's go. So, guys, next question is, pay attention, everyone. You will be able to understand everything once I ask you questions, okay? So, see, the question is here. Diseconomies of ancillary industry is, Diksha, that ancillary industries are not available. Ancillary industry might not be available. There may not be nuts and bolts, so you may have to import it from outside, or you may have to purchase it from far away, which will lead to higher costs. That's diseconomy related to ancillary industry. Okay. Now guys, another question. Come on everybody, answer this to me. Answer this to me. Come on everyone. What is average product? Average product is equals to option A. Total product divided by total cost. This is institute's question number 61. Institute's material. Okay. Option B. Total product divided by marginal product. C. Total product divided by number of units of variable input. Number of units of variable input. Option D. None of above. What do you think is the correct answer, guys? What is average product? What do you think is the answer, guys? Come on here. Okay. Very good. So the answer is average product is, we did it in production chapter. Average product is total product divided by units of labor. That is input, variable factor. So that is option number C. That's correct. Option C is correct. Correct. Very good, very good, very good. It's option C. That's indeed correct. Moving on. Next question, guys. It's basically a diagram related to, it's basically a diagram related question. So let me do it for you all, so that you all will be able to practice everything, right? So 67, question 67. Pay attention everyone. Pay attention everyone. Okay, let's go. So see guys, here it is output, here it is input. It is question 67 in institute's material. Okay, so the diagram is somewhat like this. Okay, total output it is written. Okay, and then data like this is given. Okay, 1 6 something like this, then 2 14, it's given like this. Okay, output I will erase for now, later on I'll write it maybe 1 6 2 14. Okay, great. Now pay attention everyone. So see, 1 2 3 4 5 6, 1 2 3 4 5. Okay, main data I have given you. Okay, pay attention everyone. 0 6 14 20 24 25. What they are asking you is MP, marginal product of labor 3 is dash. Come on everyone, what is the marginal product of labor 3? What is the marginal product of labor 3? Come on everybody, what is the marginal product of labor 3? So let's solve it here. It's total product of labor 3 minus total product of labor 2. Yes or no? Yes sir, you are correct. Total product of labor 3 minus total product of labor 2. Now total product of labor 3, as you can see, is 20. Total product of labor 2 is 14. So it's 20 minus 14, that is equal to 6. Is it crystal clear everybody? Yes, it's correct. It's 6, correct. 24 minus 20 minus 14. It's absolutely bang on correct. Moving on. Some more MCQs please sir. All right, let's go ahead. All right then. Here is another question for you all. Let's see whether you all are able to answer it or not. It's in Institute's material, question number 79. Marginal cost changes due to changes in dash. A, total cost. B, average cost. C, variable cost. D, quantity of output. D, quantity of output. Come on everyone. Marginal cost represents changes in what, sir? Come on everyone. Marginal cost represents changes in what, sir? You have a lot of options. Come on everyone. Yes, sir, it's correct if you are saying it refers to changes in. Yes, both are correct, but yes, whenever given you will reflect variable cost. But sir, you said that if we subtract total cost, then also we will get. Yes, that is also correct. But here, since we were given two options, we will have to select C only. But yes, if let's say option D was both A and C, then if it was the option, then I would have selected this. But since this was not given, therefore if both of these are fighting, we will always select variable cost. But the people who are thinking that option A is also correct, they are absolutely correct. But if there is a competition between these two, you will have to select variable cost only. That time you cannot say that, sir, I did not know this. You cannot say this, friends. It will not be accepted by the institute. Okay, sir, we got it, sir. Moving on. Pay attention, everyone. Question number 82. Have a look, guys, in the institute's material itself. Vertical difference between TVC and TC is equal to option A, MC, B, AVC, C, TFC, D, none. Vertical difference between TVC and TC, na? Correct. Tell me, yaar, which one is the answer? It's very easy, yaar. Come on. It's obviously total. So how can average be the answer? The total will be the answer, na? Total fixed cost will be the answer, obviously. Correct answer. Okay. Correct, sir. Correct. Moving on. Guys, moving on to the next question. Let's see how many of you are able to capture this one. All right. Question number 81. Which of following is incorrect? Which of the following is incorrect? A. Which of the following is incorrect? Remember, the question is which of the following is incorrect. So pay attention, everyone. Okay. A. LAC curve is also called planning curve. Option B, total revenue equals to price per unit into quantity sold. Absolutely correct. Opportunity cost is also called alternative cost. And option D, if total revenue is divided by number of units sold, we get marginal revenue. They are asking us which of the following is incorrect, sir. Come on, everybody. Ashfia, okay. Very good, Shruti. Shruti has given the logic also. Guys, I will also need the logic of whoever is writing their answers. Suppose your answer is A. Suppose, I'm not saying answer is A. Then you need to tell me why. If it is B, you need to tell me why. C, Y, D, Y. Whatever it is. Okay, Rohan, Rahul, great. Arisha, all right. So C. First of all, guys, the answer is obviously D. And remember why? Because here, if you divide total revenue divided by units sold, it's basically average revenue or price of the product that you are talking about. How the hell can you call it marginal revenue? Marginal revenue is to change in total revenue. So it's absolutely, obviously incorrect. Yes, opportunity cost is alternative cost because it is the cost of next best alternative sacrificed. Yes, LAC curve is planning curve, envelope curve, blanket curve, correct. TR is this, correct. So D is incorrect. Why? Because it gives you average revenue, not marginal revenue. They have written marginal revenue. Okay. Guys, one more question, which is a bit tricky, I believe personally as a student, I would have faced a lot of difficulty in this one. So let me ask you all this question, okay? Pay attention. Most important function of an entrepreneur is to dash. Option A, innovate. Option B, bear a sense of responsibility. Option C, finance. Option D, earn profit. What do you think is the correct option, guys? I need your answer, everybody. Correct. Yes, LSE curve is also called planning curve. Remember this. Please write it down with yourself. Come on, everyone, write it down with yourself. Come on. Yes, everything is entrepreneur's function, no doubt. But in most of the books and in respectively institutes material, they say innovation. So we need to remember this, that innovation is the most important function, because with innovation you can keep the business on. The day you stop innovating, thinking new ideas to the existing problems, if you stop doing that day you stop becoming an entrepreneur. You're just basically doing flat business. So that's why they must have written it to be innovation. Okay, to innovate basically. Okay, please remember it here. Let's see. Next question, everybody. Come on here. Let's see. Next question. See, this question that I'm doing is in Institute's material, question number 74. So pay attention, everybody. Question number 74 is being presented to you all. Pay attention, everyone. All right, very important. Okay, so see, what is the question like? The marginal cost for a firm of producing 9th unit of output is rupees 20. So for the 9th unit, marginal cost is 20 as far as the information right now is concerned. Okay, average cost at the same level is 15. Average cost at the same level is 15, which is true. So some options are being given. they are asking you which is true. Option A, MC and AC are falling, both are falling. MC and AC are rising. Option C, MC is rising, AC is falling. D, impossible to guess, impossible to say. Come on everybody, let me hear it from you. What do you guys feel about the same? What do you think is correct? Come on everyone. What do you think is correct, sir? And always before answering, don't be in a hurry to answer. Before answering the question, guys, first at least read the question yourself. See, I'll draw the diagram and then we will have a discussion over the same. See. So how does the diagram go? This is AC, and we have studied that MC curves AC at the minimum point. Correct. Now what we have seen is, in this given question, MC is 20, AC is 15. So MC is higher than AC. So MC is higher than AC. And when MC is greater than AC, both are rising or not? See, this is how you solve these questions. Without graphs, you cannot solve economics questions. Most of them at least. So both are rising. Now people who have drawn this graph can see that both are rising. दोनों बढ़ रहे हैं. Correct, correct, correct. Both are rising. Correct. Very good question. Okay, guys. Another very good question that I am able to come hold of in the institute's material is, question number 66, friends. Question number 66, my lovely friends. So come to that one, dosto. Come to that one. Only Parinta G, only least cost. Great. Next question. Question number 66. Diminishing marginal returns for first 4 units of variable input is exhibited means shown by total product A 50-50 B. So these are total products that is known to us, 180 260 C 50 100 150 200 D 50 90 120 240. Very good question, yaar. Amazing question. Ishan, your answer is correct. Why? Rahul, your answer is correct. Tell me why. Aska, your answer is correct. Tell me why. I need your reasons also, so that I know that you are understanding and thinking in the right pattern. Mere correct answer is not enough. Just getting correct answer is not enough, I believe. Come on, everyone. So yes, the logic is correct by you all. See guys, here it is same. There is no change. So this cannot be an answer. Forget it. Here you see, first total product is rising by 60, then it's rising by 70, then it's rising by 80. So here marginal product is constantly rising. This is increasing returns. This is increasing returns. So stop there. It's not the answer. See this one. Here it's 50, rising by 50, rising by 50. This is constant returns. No rise, no fall, nothing. Correct. Very good. Correct, Rahul. See, but have a look here. Marginal product you see here. Marginal product 50, then it rising by 30, then it's rising by, it must be 140, so it's rising by 20. So what is happening is that the rise in marginal product is with a lesser amount, and therefore MP is constantly falling, and therefore our answer will be option D. Correct answer, correct answer, correct answer. Okay, now guys, I am giving you the ultimate note, ultimate notes. Everybody, are your copies and pens outside? Because I'll give you some important conclusions. The topic is over. I'll give you some important conclusions to remember. Are you all ready, guys, to take the same? Are you guys ready to take the same? Come on, everybody. Yes, sir, we are indeed ready. Okay, then the fact that you are all ready, I'll give you the summary. So see, pay attention, everyone. Summary. Number one, some important formulas also you'll get here. Okay. First of all, average cost is total cost by quantity. Number two, marginal cost at any level is total cost of n units minus total cost of n minus 1 units. Okay. Option 3, and this is for both production and cost summary, not from any one. Okay. Number 3, average product is total product by quantity. Number 4, marginal product at any level is total product at that level minus total product of n minus 1 level. Guys, are you noting it down with your copies and pens? Come on, everybody, note it down. Very, very important, very, very important, very, very important. Yes, sir, correct. Pay attention, everybody. Moving on. Number 5. Okay, and here average product is not quantity, put it labor. That is units of input, units of variable input. I would rather write it like this. Okay. Then sum total of marginal product gives you total product, and sum total of marginal cost gives you total variable cost, gives you total variable cost, gives you total variable cost. Okay. Next point, number 7. Total cost equals to total variable cost plus total fixed cost. Write it down, everybody. Keep the work on. Keep the work on. Point number 8. Average cost is equals to, or forget it, total cost equals to average cost into quantity. Okay. Next, number 9. Average fixed cost equals to total fixed cost by quantity. Average variable cost equals to total variable cost by quantity. Total variable cost by quantity. Sir, please move ahead. Okay. Amazing, sir. The fact that you've got it now, friends, the fact that you have copied it now takes me to another head. Takes me to another head. Okay. What is that, sir? What would that be, sir? What would that be, sir? So the another head that I'll talk about right away is number 11. Number 11. Pay attention, everyone. In the short run, it's the law of variable proportion that operates. In the short run, it is the law of variable proportion that operates. Number 12, in the long run, it is the law of returns to scale that operates. That operates. Okay. Point number 13. average fixed cost curve shape is rectangular hyperbola. Next point, the short run average cost, short run marginal cost, short run variable cost are all U-shaped, due to law of variable proportion, due to law of variable proportion. Next, number 15. Total cost and total variable cost in the short run are inverse S. Shape is inverse S. Again, due to law of variable proportion. Okay, due to law of variable proportion. Moving on, 15 number you have copied it. Question or point number 16. TFC in the short run is a horizontal line parallel to x-axis. Next point, AFC can never be 0. Next point, point number 18. In the long run, LAC, that is long run average cost curve, basically is U-shaped due to law of returns to scale. Next point, point number 19 is the lower part of LAC curve is due to economies of scale. The upper part is due to diseconomies of scale. And finally, the minimum point of AVC is to left of minimum point of AC. My dear friends, please copy it down and please tell me once you have copied it down. Fatafat, I'm waiting. Have you copied it down, everybody? Come on, everybody. Yes, sir. You have got it, sir. We have got it, sir. Great friends. Great friends. So most of you have been able to get it correct. So that's correct, sir. Guys, if this 20 points you remember and you practice whatever we have done, it's for sure that production and cost will not be a problem for you in your foundation examination. It's absolutely sure, guys. So with this said and done, I'll see you all with a new chapter in the next economics class. Until then, goodbye, tata everybody. Take care. Thank you very much.